This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
Welcome back. There are almost 2,700 homes scheduled to be auctioned this week. New South Wales will hold about 870, with about 770 in Sydney. Victoria will hold about 1,200, with most of them in Melbourne. Queensland will hold 340, with about 200 in Brisbane. South Australia will hold about 160, with virtually all of them in Adelaide. Western Australia, Tasmania and the NT will hold 27, and Canberra will hold 95. Take a look at the most viewed properties going to auction this weekend, and in New South Wales. The top property is 33 Boronia Avenue, Adamstown Heights. This three-bedder has 2 bathrooms and a plunge pool in the backyard. Asking price is about $850,000. The top property in Victoria is 27 Summit Road, Lilydale. This home on the edge of the city of Melbourne has 5 beds, 2 baths, 2 parking spots. It has sweeping views of bushland. It sits on about 1,500 square metres. The top property in Queensland is 12 Cameron Road, Southside. This home near Gympie sits on about 10 acres, has 3 beds, 2 baths and a large shed with a hoist for working on vehicles. The top property in South Australia is 6 Castle Avenue, Prospect. This large 4-bedroom home was originally built in the 1930s. It's been extensively renovated. It has a 21 kilowatt solar system on the roof. The top property in WA is 25 Honours Rise, Marangaroo. This 4-bedder in Perth's northern suburbs has extensive outdoor undercover entertaining areas, large 2-car garage and a decent-sized pool. And the most viewed property on the REA Group website this week is 15 Horndale Drive, Happy Valley in Adelaide. This 3-bedder has 1 bathroom, 2 parking spots. It's got large living areas, decent-sized backyard. The home's been freshly painted, has 18 solar panels on the roof. There's also a massive driveway with drive-through access to a rear shed. The home is 30 minutes from the CBD. Asking price about $815,000. And for more on property, I caught up with Flaherty from REA Group.
Well, we're definitely seeing pretty strong conditions for sellers. We've seen pretty robust auction clearance rates in recent weeks. We're also seeing quite high levels of activity on realestate.com.au in terms of search activity inquiries. And I think particularly on the other side of the latest interest rate cut that we saw this week, that's going to bolster demand even further. We saw exactly that happen in February. There was a big jump in the total number of people looking to buy.
Yeah, what parts of the country are doing really well at the moment?
Well, we've seen some interesting shifts in the trends. So a year ago, it was all about WA, which was surging ahead. But what we're now starting to see is that market has slowed down. We're actually starting to see pretty strong signs of a pickup in Victoria. A lot of buyers agents that we talk to are actually talking about the fact that there are a lot of interstate investors now looking at the affordable prices in Melbourne, and that's helping to drive up demand. But across the board, generally speaking, we know that on the other side of an interest rate, people feel more confident. The cost of borrowing comes down, and it does take a bit of time for those prices to readjust. So I think that a lot of people who were waiting to get into the market until we were sort of at the beginning of a new price growth phase may now be looking to do so.
Yeah, obviously the RBA cut rates this week, and they could cut rates again in just 6 weeks' time. So yeah, just talk about the impact that rate cuts can have on the property sector.
Look, we know interest rates have an enormous impact on property prices. If we look at what happened in 2021, when interest rates were slashed on the other side of the pandemic coming in, that drove one of the fastest escalation in home prices that we've seen in Australian history. If we look at some markets, in just 5 years, property prices are sitting 80% higher. So we know that when interest rates come down, that is very likely to fuel a higher level of price growth compared to what we were seeing just a year ago.
Yeah, so are you expecting pretty decent price growth then to follow through towards the end of this year?
Look, we do think that price growth is going to continue to pick up, not just interest rates coming down, but also we're seeing a pickup in investor activity. So compared to a year ago, we are seeing more investors active in the market. And I think that with that prospect of further capital growth, that's likely to pick up further. I think as well we're going to see a bit of an increase in first home buyer demand once the expansion of the policies that enable them to get in on 5% deposits come in. So I think that there's quite a few factors in play over the rest of the year that could drive that growth much higher.
Yeah, you talked about increased interest in people looking to buy apartments in Melbourne in particular, but what about regional parts of Australia? Are there any areas out in the regions that are doing pretty well right now?
Well, we're actually seeing pretty similar trends in the regions as we are in the capital cities. One of the things that we are continuing to see is that affordability factor is continuing to drive more people, particularly younger people and young families in particular, out into those regional areas. We're seeing a few outperformers. One is Townsville. We've seen enormous growth in Townsville, not just from the owner-occupier market, but a really strong increase in demand from investors, which has led that to be one of the best performing regions in the country. But similarly, a lot of markets that are pretty, have a diverse economy, they're not too far away from a capital city, they're doing quite well. And I think, again, it's that affordability. A lower median price point in regional areas is driving those buyers who can't afford to purchase in greater cities out into the regions.
And are we seeing construction picking up at all?
Look, it depends on where you're looking. And again, we're seeing very different trends around the country. The cost of building is still extremely high, but what we know is that developers love to build in markets where prices are rising. So we've seen really strong pickups in construction activity in markets such as South Australia, Western Australia, Queensland, where home growth has been strongest. But if we look in New South Wales and Victoria, we've actually seen a decrease in the amount of lending going to the construction of new dwellings, purchases of new land over the past year. So I think that those two cities, Sydney and Melbourne, the housing issues in terms of supply are very likely to worsen, whereas those other markets where we have seen a big increase in lending for new development activity, we might see them start to see that ratio of supply versus demand improve over the coming years.
And Flaherty, thanks for coming on the show.
Thank you.